Citibank projected the tokenized securities market will hit $5.5 trillion by 2030. The same week, Ripple Prime appeared on the official DTCC participant list at entry number 9388, sitting next to JP Morgan, Goldman Sachs, and Citibank itself. And Binance opened XRP ETF access to 300 million customers in one move. These did not happen in the same week by accident. Did you know Ripple was already confirmed on the official DTCC participant list before this video? Drop a yes or no in the comments right now. This is not financial advice. This is for educational and informational purposes only. Do your own research before making any financial decisions. If this kind of global financial analysis is useful to you, hit the like button. It helps this channel reach more people who need to see it. Now let me walk you through exactly what happened and what it means for the thesis you have been holding. Most investors in this space know the acronym DTCC without ever stopping to understand what it actually does. The DTCC is the post-trade backbone of the United States securities market. Every trading day, trillions of dollars in transactions flow through its infrastructure. Equities, fixed income, repo financing, securities settlement. When you buy or sell a stock through Fidelity, Charles Schwab, or whatever platform you use for your retirement accounts, the clearing and settlement of that transaction runs through the DTCC. Clearing means confirming the buyer has funds and the seller has shares. Settlement is the actual transfer of ownership. 2 business days after most equity trades, the DTCC is what makes that transfer happen. The vast majority of Americans who own stocks, bonds, or mutual funds inside a 401k or IRA have financial activity flowing through this system every single day without knowing it. It sits below the visibility line. It is the plumbing the entire system depends on. The DTCC maintains an official participant list. These are the firms granted direct operational access to the clearing and settlement infrastructure, the institutions trusted with the post-trade plumbing of the entire U.S. financial system. JP Morgan is on that list. Goldman Sachs is on that list. Citibank, HSBC, Deutsche Bank, ING, Charles Schwab, Cantor Fitzgerald, Freddie Mac, and Fannie Mae are all on that list. Getting on this list is not a matter of applying. Access is granted through institutional vetting and regulatory approval. Entry number 9388 on that same list is now Ripple Prime. Ripple Prime started as Hidden Road, a multi-asset prime brokerage that Ripple Labs acquired in April 2025 for $1.25 billion, one of the largest acquisitions ever completed by a crypto company. It made Ripple the first crypto-native firm in history to own and operate a global prime broker. The deal closed. Hidden Road was rebranded as Ripple Prime. Its position on the DTCC participant list is documented, publicly available, and sitting right there on the official record. What does a prime broker actually do? A prime broker handles execution, clearing, and settlement of securities for institutional clients, hedge funds, asset managers, financial institutions that need access to liquidity, and the ability to manage complex trades across multiple asset classes. Only the most established and operationally trusted firms have ever operated at this level. Most coverage of this development called it rare for a crypto firm. That understates it. It has not happened before. Ripple Prime already uses RLUSD, Ripple's dollar-pegged stablecoin, in its operations. The connection between the XRP ecosystem and the DTCC's settlement infrastructure is not theoretical or projected, it is running. Institutional clients can now execute, clear, and settle traditional securities through a platform rooted in Ripple's technology, using its stablecoin as part of the process. That means RLUSD is already inside the plumbing of US securities markets, not in a sandbox, not in a pilot, in production, inside the same infrastructure that handles your brokerage activity today. But this is the part almost nobody is sitting with. Citibank's projection puts the tokenized securities market at $5.5 trillion by 2030, up from $17 billion now. Tokenized securities are traditional assets, stocks, bonds, real estate, government treasuries, converted into digital tokens on a blockchain. Faster to settle, cheaper to move, and programmable in ways legacy instruments are not. The entire financial industry is preparing for this migration. Banks are not asking whether it will happen. They are deciding when and how. And when that migration comes, it needs post-trade infrastructure to handle clearing and settlement at scale. The firm confirmed inside the DTCC clearing backbone that Citibank itself operates through is Ripple Prime. For someone who has spent decades watching retirement savings flow through the traditional financial system 2-day settlement windows, correspondent banks charging fees on every international transfer, infrastructure built long before digital assets existed. What Citibank is projecting is the future version of that same market. The question is, which infrastructure will handle the clearing and settlement of that $5.5 trillion when the migration arrives? Ripple Prime is already positioned inside it, not a projection. A documented entry on an official list. Brad Garlinghouse said it plainly. The winners are going to be the ones who own the underlying infrastructure. That is not a roadmap statement. It describes what Ripple Prime already is. A documented operational entity inside the DTCC, clearing and settling securities, running a stablecoin, sitting on the same official participant list as JP Morgan. JP Morgan is a customer of Ripple. HSBC is a customer of Ripple. Citibank has connections to Ripple's technology through other platforms. 3 confirmed relationships with 3 of the most recognizable names in global finance, and Ripple's entity is now inside their shared post-trade infrastructure. The US side is in place. Now here is where things get serious for the other side of the world. Something parallel is building in Japan. Japan's ruling Liberal Democratic Party, the LDP, has submitted a formal proposal to the country's financial minister calling for a legal framework governing crypto ETF trading and promoting yen-based stablecoins. The strategy is framed around AI plus on-chain finance and cross-border payment use cases across Asia, not a think tank position paper. A formal government submission from the ruling party of Japan. When a ruling party submits a framework proposal to a financial minister, the institutions operating in that country begin preparing for the legal reality that proposal is likely to create. They do not wait for the final law. They start adjusting. The JPYC is the stablecoin drawing attention in that context. A trust bank-backed yen stablecoin from the Startail Group and SBI, issued through Shinsei Trust and Banking. It is not yet live, but its stated path runs to the XRP ledger. That ledger already runs as the core network for USDC, RLUSD, euro-denominated stablecoins, and the XSGD. Ripple has been adding bank-grade stablecoins to that ledger. The JPYC would add Japan's national currency to the list. SBI Ripple Asia has been operating in Japan for years, a joint venture that predates the current wave of policy attention. The foundation is already there. Plans are in place to roll out RLUSD in Japan through SBI's licensed exchange. That rollout was anticipated for the second quarter of this year. As that window closes, the announcement is expected anytime. Japan is also in the process of reclassifying XRP and other financial products under the Financial Instruments and Exchange Act. Full industry compliance is expected in the first half of 2027, 12 to 18 months from now. That timeline matters because regulatory reclassification does not flip a switch on the deadline date. Institutions begin aligning their systems, updating product offerings, and adjusting compliance frameworks well before the final deadline arrives. That preparation is already happening, and this is where the story becomes dangerous to dismiss. SBI remit just crossed $2.5 trillion in cumulative international remittances. The international remittance arm of SBI, the same SBI deeply integrated with Ripple's infrastructure. $2.5 trillion already moved across borders through this system. Real money already processed. For someone who has spent years watching the banking system handle international transfers, the wire fees at the sending bank, the correspondent bank cut in the middle, the fees at the receiving end, the multi-day processing windows, that number is not abstract. The system that moved $2.5 trillion is not hoping to compete with the correspondent banking model someday. It is operating at serious scale with confirmed infrastructure in production. Think about what it actually costs to wire money internationally through traditional banking. Every stop takes a cut, and the process takes days. Infrastructure that has already moved $2.5 trillion through a faster, cheaper model is not a technology story. It is a story about where value flows and who captures the fees that currently bleed out at every step. Then there is this from the last place many people expected it. Peter Brandt is a veteran FX and futures trader with decades of experience in traditional financial markets. He appeared as a guest on a program whose host has historically been skeptical of Ripple and XRP. Brandt was asked what he liked in the crypto space. His answer was direct. If you had a bet on a horse to become transactional, it would probably be XRP. The host pressed him. Brandt confirmed it, a veteran traditional markets trader with no known XRP position, speaking on a platform with a long history of skepticism toward this asset. Nobody paid him to say it, nobody prompted it. It came up unprompted from someone who spent his career in traditional markets. Now, here is where things get serious for the retail access expansion. Binance, the world's largest crypto exchange by customer count, has effectively launched 9 XRP ETF products on its platform. Canary Capital, Volatility Shares, Amplify, Rex, Osprey, Pro Shares, Tucrium, and 21 Shares. 300 million customers globally. Every one of them now has direct access to XRP ETF products through a platform they already use. No new account required. The US spot ETF data runs in the same direction. XRP spot ETFs pulled in $15 million in net inflows last week, Bitwise leading with $9.3 million, Canary Capital at $2.38 million. Total assets under management now sit at $11.2 billion with $471 million in cumulative historical inflows since launch. The capital allocation is already happening. 700 million XRP was relocked into escrow recently. 1 billion released each month. Similar amounts relocked. Supply management has been consistent. Now let me pull all of this together, because once you understand that the DTCC does not add participants for public relations, and the LDP does not submit proposals to a financial minister for symbolic reasons, and SBI does not process $2.5 trillion by running a pilot program, you stop asking whether this is real. You start asking whether you are positioned before the people around you figure it out. Citibank is not projecting $5.5 trillion out of enthusiasm for blockchain technology. They are projecting it because the institutional infrastructure required to process, clear, and settle those tokenized assets is being assembled right now with real capital, real legal structure, and documented access. The entity inside the DTCC post-trade backbone, the same infrastructure Citibank, JP Morgan, and Goldman Sachs move daily volume through, is Ripple Prime. In the United States, Ripple Prime confirmed at entry number 9388 on the official DTCC participant list. 3 of the largest global clearing banks with documented customer relationships with Ripple's technology. $11.2 billion already under management in XRP ETF products, with institutional capital entering at a measured, consistent pace. In Japan, the ruling party formally requested the legal framework for yen stablecoins and crypto ETFs. SBI has already processed $2.5 trillion in remittances through Ripple-connected infrastructure. RLUSD is preparing to enter the Japanese market through SBI's licensed exchange. The Trust Bank-backed yen stablecoin has a documented path to the XRP ledger. The regulatory reclassification integrating XRP into the Japanese financial system has a documented 12 to 18-month implementation timeline. Globally, 300 million Binance customers now have access to 9 XRP ETF products from established asset managers. One market. $5.5 trillion by 2030, projected by one of the largest banks in the world. 2 hemispheres building toward it simultaneously. One ledger already running as the core settlement network across multiple currencies and jurisdictions. One prime brokerage entity confirmed inside the post-trade backbone of the U.S. financial system. The DTCC does not add participants for public relations. The LDP does not submit proposals to the financial minister for symbolic reasons. SBI does not process $2.5 trillion by running a pilot program. These are operational decisions made by institutions that understand what infrastructure they are building toward. The convergence of the DTCC confirmation, the Japan regulatory framework, the SBI remittance milestone, and the Binance access expansion is not coincidental timing. These are separate institutions in separate jurisdictions arriving at the same conclusion at the same moment. For someone who has been patient with this thesis through years of skepticism, who sat across the table from people who dismissed this technology, who watched mainstream headlines misrepresent what was being built behind the scenes, this week's developments are not a surprise. They are a continuation of a story whose foundations were laid years ago. Every institutional relationship dismissed as uncertain is now producing documented outcomes. Every regulatory process dismissed as stalled is approaching its implementation deadline. The infrastructure always required institutional alignment, which always required regulatory clarity, which always took longer than the optimists expected. And now across multiple jurisdictions simultaneously, that clarity is arriving on official participant lists, in formal government proposals to financial ministers, and in capital allocation data that does not speculate. The people who tracked the structural work while others watched the price understood this before it became obvious. Does anyone in your immediate circle know about Ripple Prime's confirmed position on the DTCC participant list? Drop one word in the comments right now. I am genuinely curious how far this news has actually traveled. If this video gave you a clearer picture of what is actually happening, go ahead and like it. It helps this channel reach more people who need to see this. Subscribe so you do not miss the next one. Share this with someone in your circle who is only following domestic crypto news and has no idea what is happening globally. The DTCC does not announce participants before the work is done. Neither does the LDP. Neither does SBI. The documentation comes after the decision. The decision was already made. What you are watching now is the record catching up to the reality. Stay informed, stay positioned. I will see you in the next one.